Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Donald Trump promises to follow through with 25% tariffs on Canada and Mexico tomorrow. The loonie and Mexican peso steady after falling on the president's remarks. Bloomberg learns the US is investigating whether DeepSeek bought Nvidia chips through third parties in Singapore to avoid export restrictions. Plus, investigators recover the black boxes from the American Airlines regional jet that crashed mid-air with a military helicopter, killing everyone on board. Earnings lines crossing from Swiss pharmaceutical company Novartis. Fourth quarter core earnings per share EPS coming in as a beat above the estimates $1.98 versus the estimates of $1.82. So it's a beat in terms of core EPS coming through from Novartis. The company expects sales to grow mid to high single digit. We know that on the call, the scrutiny will be what they say around their key blockbuster drug for the US market and the impact potentially of generics taking some market share there. So that's Novartis. Top line, it's a beat in terms of core EPS for that Swiss drug maker. A stock to watch at the open, 8 a.m. UK time. Let's get to the market impact then. Tariffs again in focus. Trump saying they will be coming for both Mexico and Canada, potentially as much as 25%, potentially within the next 24 hours. So we watched the impact of that. Yes, you saw the drop in the CAD. You saw the drop in the Mexican peso. As we said in the headlines, some of those losses have been paired. The read across in terms of what this means for global trade will be being assessed, of course, by these markets. European futures currently pointing a little softer, but after another record yesterday, another record high for European stocks. Part of that was the earnings story. And again, we get more earnings through this hour. FTSE 100 futures currently pointing to modest gains of 0.1%. S&P futures stateside after some gains of around between 0.4 and 0.5 yesterday, currently pointing higher by 0.2%. Nasdaq 100 futures looking to add 109 points, currently up 0.5%. The earnings coming through from Apple and particularly the guidance on the current quarter, reassuring markets, and Apple gaining on the back of that, as are some of their Asian suppliers. Let's flip the board and look cross-asset then, and we'll see how the yield story reacts to what's happening on these tariff threats. 454 right now. Yields are up, close to 3 basis points on the 10-year, 454 on the 10-year, and again, we'll see how that readjusts. The ECB, of course, as expected, cutting rates yesterday to 2.75. Will the European Central Bank have to go further? We have more data across the macroeconomy of the Eurozone today. 103 on euro dollar. The story really is, though, on dollar strength. The Bloomberg dollar index, the last time I checked, was up 0.2%. Brent at $77 a barrel, currently up 0.5, lifted again by the tariff threat. Canada and Mexico both, of course, supply oil into the US markets. Gold currently trading flat and close to record highs, lifted by those tariff threats, 2,795 per troy ounce. Let's get the details then on what could be being imposed on both Mexico and Canada in the next 24 hours or so. US President Donald Trump says he will follow through with 25% levies on both Canada and Mexico starting tomorrow. It is a move that could lead to a trade war with the two biggest buyers of US goods, and it's part of the president's efforts to reshape supply chains and shrink trade deficits. Trump also has his sights on China, but is considering an exemption.
Mexico and Canada have never been good to us on trade. They've treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need. We have all the trees you need, meaning the lumber.
As I mentioned, oil is rising as President Trump reiterated his tariff plans, currently up 0.5% on Brent, although crude flows may be exempted from the levies. We don't have certainty on that question yet. Bloomberg MLive strategist Mark Cranfield joins us now for the market reaction to this story. Mark, not a huge surprise that tariffs are coming in some form. The determination, though, clearly from President Trump to actually enact tariffs after a lot of back and forth, a lot of question marks. Talk us through the market impact that we've seen so far.
Well, certainly traders are taking no chances here in Asia, and one of the main moves today has been the dollar against the yuan. So even though most of the focus is on what may happen to Mexico and Canada, it's actually the yuan which has weakened substantially during the Asian trade today. It's the offshore yuan. The Chinese onshore markets are closed, but there's still plenty of liquidity going through in there. And the Korean won is also quite a bit weaker as well. So clearly people are concerned that if tariffs do get going, it won't just be one or two countries, it's going to be quite a few, and eventually it will come round to China's turn as well. So you're seeing quite a bit of defensive action in there. Generally, the US dollar is pretty firm anyway. Also, dollar yen is quite a bit higher this afternoon as well. So traders are certainly going into the weekend with expectations that something is going to happen. Exactly how big the tariffs might be, of course, seems to be debated up to the last moment. The Wall Street Journal have a story saying that the negotiations are likely to go on to the 11th hour and people will be trying to find a way out of it. So that's also in the play. However, Mr. Trump has said that he expects to say something at 3 p.m. Eastern Standard Time on Friday, which is pretty tricky for US traders because normally by that time of day on a Friday, most US foreign exchange traders especially are heading for the door because by then European markets are closed, liquidity is drying up very quickly, and equity markets are coming towards the end of their week as well. Should he deliver something that would affect foreign exchange markets at that time, it could be very volatile at the end of a Friday when there's nobody around to trade it. So whether it comes then or he delays it a bit, Monday morning in Asia is likely to be very lively indeed.
Okay, yeah, traders may not be heading to the bar quite as quickly as they might do otherwise on a Friday as they stick to their desks. Mark, what does it? The Fed talked about Trump policy in terms of how they're weighing this up and the uncertainty there. Do you think it changes? Do you think if he comes through, we come through on Monday, the tariffs are there, does it change the calculus in terms of how we expect the Fed to react? Do markets start pricing in a less dovish Fed?
It certainly will be part of the case. To some extent, the markets have already backed up quite a way as far as the Fed dynamics are concerned. If you look at the pricing in the market, we're looking at less than 2 interest rate cuts for the rest of this year from the Federal Reserve, which is quite a way down from where we were. And I don't think the conviction on that is particularly high anyway, particularly after Jerome Powell was pretty neutral this week. And he said that the inflation target isn't going to shift from 2%. So it won't take much for people to dial that back a little bit further as well. Of course, the Fed is not just looking at one side of the equation. They do want to see what extent of tariffs there are, and if there's going to be tax cuts within the US as well. They will also want to see the response from foreign countries as well, because if there is a hard response from certain people, if tariffs are put in one place and there's a hard response on the other side, that will definitely affect the Fed's outlook for global trade, which could filter back in towards what happens on the domestic side as well. There are many moving parts to the equation. The Fed has a lot of things to digest. In those situations, central banks usually like to take their time, and it gives them more incentive for not changing policy. So if anything, all of these things going on make the Fed more reason to stay on hold for longer.
OK, Bloomberg's M-Life strategist Mark Cranfield on the central bank and market reaction to the prospect of 25% tariffs. Yields up 2 basis points on the benchmark 10-year, and the Bloomberg dollar index up 0.2%. Hold on to your hats come Monday then, particularly for Asian traders. Mark, thank you. Now, Bloomberg has learned, meanwhile, that US officials are investigating whether Chinese AI startup DeepSeek got around American export controls to buy advanced Nvidia chips, possibly through third parties in Singapore. Let's get more now with Matt Bloxham from our Bloomberg intelligence team. Matt, what do we know at this point?
Yeah, not that much, but we do know that Singapore accounts for about 20% of Nvidia's sales. It's essentially a hub from which kind of customers.
Singapore accounts for 20% of Nvidia's sales.
Yeah, and Nvidia says that it's a build to, not a ship to location. So you have a lot of kind of holding companies that buy through Singapore and then send them on to other countries. Where they go, nobody knows. But I think it's not a massive surprise that China has potentially been getting access to the most advanced chips, and no sanctions are completely watertight. And it does raise concerns about how do you continue to kind of put a brake on China getting access to this advanced technology and maintaining that leadership. You know, there have been stories about whole data centers being built in third countries and then being dismantled and shipped to China. So I think, you know, within the technology industry, it's kind of common knowledge almost that these things happen. I think it's been common knowledge to the US for a while too, and they've been monitoring the situation. But obviously there's a lot of concern, you know, given the significance of what DeepSeek's done, that they have enough safeguards in place. And, you know, I guess Nvidia must be a little bit worried that, how much will the probe will focus on them and whether they were doing everything they should have been doing. And if there's a precedent here, if you look at Ericsson, went through a number of years of great difficulty with the US about bribery and corruption in some of its operations around the world, including Iraq. They suffered fines and they're still under a DOJ investigation. So, there could be follow-on implications for Nvidia. We'll just have to see how this plays out.
Okay, yeah, an Nvidia statement, of course, coming out earlier this week suggesting that their assessment was that the chips that were being used by DeepSeek were compliant. But again, we'll see what this investigation leads to. Talking of AI, staying on the subject of AI, there's a big question mark, of course, about AI and to what extent Apple is making use of that. Apple giving a reassuring revenue forecast for the current quarter, helping boost shares after its holiday results showed jarring declines for China and the iPhone. Here's Apple CEO Tim Cook during the earnings call.
If you look at our Greater China revenue for the quarter, we were down 11% year over year. And over half of the decline that we experienced was driven by change in channel inventory.
So that's Apple's CEO Tim Cook talking about that drop in the Chinese market. What else stood out to you? Was that the flagship downside number for Apple? What else were you latching onto from these earnings?
Yeah, China was definitely. I mean, people were expecting China to be weak, but it was 14% below consensus expectations, so it really was a big miss. But luckily for an iPhone was 2 to 3% light. Luckily for Apple, both the Mac and the iPad were really strong. So in aggregate, the results were pretty much in line with expectations. I think for me, the kind of concern is that China's probably not going to get better for them because they don't have the capability to sell the AI products into China. They're struggling to find a partner for that. Maybe China will continue to block them. So, given that all the technology evolution we're seeing, including DeepSeek, is the Apple iPhone offering in China going to become weaker and weaker? I think on the optimistic side, there's a two-phase iPhone refresh coming up this year. You've got the cheap SE phone for a refresh in the next couple of months. That could be really important for the India market, which they see as a big opportunity. And then you've got a kind of more premium refresh later in the year, perhaps in autumn, with a much thinner iPhone. So I think expectations are you've got a much more substantial iPhone refresh this year, and they will continue to roll out better AI features through this year. So, they're a huge company. They know what they need to do, and I think people are still confident that they will. Playing the slow game is the right strategy for them because they've got such brand strength and loyalty with their customer base.
And they've wanted to make sure they get that AI proposition right, haven't they, for their users. Matt Bloxham, thank you very much indeed from Bloomberg Intelligence, breaking down those AI or Apple earnings with that AI component, of course, but also a look at what's happening in terms of the probe around DeepSeek and the chips that it has been using. Now, talking of chips, we're going to check in on both Samsung and SK Hynix, because there's a reminder that Samsung is still playing catch-up when it comes to the high bandwidth memory that goes and accompanies these Nvidia accelerators. They have managed to get sign-off, they did back in December, we understand, for their latest high bandwidth memory chips, and are able now to sell those into the Chinese market along with Nvidia's Chinese compliant accelerators. Both stocks, of course, trading after South Korea opened up after the Lunar New Year. So this is the first trading print, and you're seeing, of course, a big drop there coming through from SK Hynix, which is on the innovation side leading on that front, but both reacting as well for the first time to that DeepSeek story. So Samsung currently down 2.2%, SK Hynix falling more than 9%. Now, switching focus, and US investigators have found the black box flight recorders from the American Airlines regional jet that crashed in Washington after a mid-air collision with a US Army Black Hawk helicopter. We want to warn the audience that some of you may find this video graphic. It captures the moment the jetliner and helicopter collided. 67 people were killed in one of the deadliest US air disasters in decades. Let's bring in our aviation reporter, Danny Lee, who has been following the latest developments. Danny, get us up to speed on what investigators have found.
Well, the crucial piece of evidence is the black box is a flight data recorder and a cockpit voice recorder coming from the American Airlines regional jet. They've already been sent to the labs for examination by the National Transportation Safety Board, and that analysis can begin fairly quickly once they extract the data. This will be crucial because they can potentially start to find out in the minutes before, the lead up to, and also the seconds before. What were the conversations in the cockpit between the pilots, particularly with the air traffic control, which is under scrutiny? And also, were there any warnings, particularly as this plane would have been traveling down in the dark through the Potomac River, a very busy piece of airspace? So these will be very important things to analyze in the days and weeks and potentially months to come. So, yeah, that kind of evidence recovered, but still, many answers and obviously the recriminations from one of the worst air disasters to happen in the US in decades, given it is such a very safe aviation system. And
Danny, you talk about the recriminations. We've been hearing from President Trump. He gave a press conference and caused controversies. What was he saying that was controversial? Has he faced pushback? Does anything about what he's been saying around DEI and air traffic control, does any of that hold up?
Well, yeah, just to recap with the audience, President Trump was talking to reporters and pointed out that DEI, diversity, equality and inclusion, may have been a factor in this accident. We actually don't have any evidence that it's far too early in this mid-air collision, this investigation, for any blame to be apportioned. But this is something that those on the right, and particularly the Republican Party, have been pushing over many, many months increasingly. And we have seen corporates being under pressure to dismantle their DEI policies. But the inference from President Trump is that a DEI hire is not as good as a standard hire. But we know nothing yet of the causes, and President Trump actually doesn't have any evidence for it, and he admitted that. But clearly, there is a lot of finger pointing at the moment for what a collision that maybe could have been avoided, frankly, and typically given how busy the airspace is. But yeah, we'll try and get more answers in the weeks and months to come on this.
Okay, an important update from our aviation reporter, Danny Lee, who's been following all of this for us. Danny, thank you. Coming up, showdown in the German parliament as the favourite to become the next chancellor is accused of breaching a firewall by turning to support from the far right. We're going to have the details from Berlin next. This is Bloomberg. Welcome back. The German parliament is set to vote on a hardline immigration bill, which has caused a stir, not just because of its tougher stance, but because Friedrich Merz, the favourite to become the next German chancellor, is relying on support from the far right to get it through. He's faced a fierce backlash, including accusations that he's breached a firewall aimed at keeping the far right AfD from power. Bloomberg's Oliver Crook joins us from Berlin. Ollie, explain the controversy.
Yeah, so listen, I mean, this is a really sort of significant development in the political race here since basically the government fell earlier in the winter and the fall. And frankly, Tom, I think this is probably the most significant thing that has happened in the race. How it's going to play out is going to be very, very interesting. But as you say, Tom, this is significant not just because of the bill, the content of the bill, because the content of the bill itself, particularly given the context of immigration, how important it is in Germany right now, how important it is across Europe, how important it's been across the United States, is not really that radical. What he is calling for is more permanent border checks. CDU is bringing this to the Bundestag to vote today at about 10:30. We should get the result by about noon. Accelerated deportations for illegal immigration and heightened security measures and empowering law enforcement in order to basically pursue those goals. The SPD and the Greens will not vote with it. They say that it's unconstitutional, is against European law. That is a sort of debate. What it will mean, though, is for the first time, Tom, the first time since the Second World War, that the CDU and the sort of mainstream parties will be voting with the AfD for a piece of legislation. And of course, this is what is causing this sort of fundamental controversy here, Tom. And there's a cordon sanitaire in France. There's all this stuff across different European nations. In Germany, it is, of course, very, very different because for many, this is a sort of reminder of how the Third Reich came into power, how the Nazis grew into power, because it was by little concessions. Again, this is a different time, but this is what is getting people on the streets and protesting.
So, and to that point, it's a huge gamble, isn't it? It's a huge gamble for Merz and the CDU. How do we expect this to play out in the hours and days ahead?
Listen, Tom, I have to be honest with you. I have no idea which way this is going to go. There are a couple of different arguments about how this could play out, and I think it's a really sort of interesting debate. The thing is, fundamentally, even if you disagree with what Merz is doing or how he's addressing it, there is a fundamental problem in German politics. There's this huge fragmentation where you have all of these parties that have sort of double-digit teens, about 20% of the vote, and basically not able to get anything done. So what Friedrich Merz is trying to do is trying to say that, hey, there is a party here that can take your main concern of immigration seriously and can actually do something about it. However, he has got criticism not just from the other parties. We have Angela Merkel, the former chancellor of Germany, the former head of the CDU, going out against this. We had two church groups, two of the largest churches in Germany, coming out against this. You know, this is the Christian Democratic Union, the CDU. These are not people that tend to weigh into German politics. So this is sort of significant. And of course, for many, they would say that, listen, the CDU is just trying to imitate AfD policies. People prefer the original. This could basically totally torch Merz. On the other hand, this is basically also potentially embracing a more pragmatic approach. And basically the criticisms from the AfD is that there is no conservative vote left in Germany because basically if you vote for the CDU, they're going to end up in coalition with the SPD and the left, and you're not going to get any sort of progress. So he's trying to sort of undermine the support from the AfD and try to attract some of those voters. The other side of this is, of course, the SPD and the Greens could have voted for this piece of legislation. So this is something that could also harm them in the polls. And when you look at the latest polls, and I just wanted to bring one up from 2 days ago because this is sort of significant, you see that the CDU has lost a little bit of support over the last couple of days. I think the final consensus on this will have to wait till Monday. But look at the scores there. CDU at 29% in this YouGov poll, the AfD at 23%. That is a 6-point spread between these two parties. The SPD, to win the election in 2021, they closed a 12-point spread within a month or two of the election. So no one thinks that this is going to be the outcome, but just looking at this race and how much a sort of torpedo has just been fired into it, I think anything could really come out of this weekend.
OK, Bloomberg's Oliver Crook on some really important political developments happening on the ground in Germany, of course, the consequences and how that could ripple through to the election taking place, of course, later in February. Ollie, thank you very much indeed. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back. Happy Friday. The president of the world's largest commercial property owner says he's preparing for higher tariffs under President Trump. Blackstone's John Greil spoke to Bloomberg's Sonali Basak after the firm reported a surge in profit despite a slump in its real estate business.
I think there's definitely going to be higher tariffs, but I think it's going to be fluid given some of these negotiations. So I do think our businesses need to be aware of this. Our investors do. But I think we've got to wait and watch a bit to see where it settles.
Do you have concerns also on the immigration front that some of the immigration policies under the Trump administration could cause labor market distortions that could impact your businesses? Could it be inflationary?
You know, I think it's still early here to see what's going to happen. Obviously, there's a shift in immigration policy. The focus now is on deporting criminals. I think, again, we're going to have to wait and see the extent of what's going to happen to really understand it. On the inflation question more broadly, I was encouraged to see the new Treasury Secretary, his testimony when in Washington, D.C. He talked about the fact that inflation is a killer for working families. He talked about being committed to fighting the affordability crisis. So there's clearly a recognition that inflation is an issue.
Blackstone president, of course, and COO John Greil speaking to Bloomberg's Sonali Basak. Coming up as February the 1st looms, the day Donald Trump has threatened to impose tariffs on Canada and Mexico, we discuss the implications for global trade. That's coming up. This is Bloomberg. Good morning, happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Donald Trump promises to follow through with 25% tariffs on Canada and Mexico tomorrow. The loonie and Mexican peso steady after falling on the president's remarks. And Bloomberg learns that the US is investigating whether DeepSeek bought Nvidia chips through third parties in Singapore to avoid export restrictions. Plus, investigators recover the black boxes from the American Airlines regional jet that crashed mid-air with a military helicopter, killing everyone on board. Let's check in on the markets then. European stocks posted fresh record highs yesterday. The earnings story supportive, the ECB cutting rates, and the focus shifting now to the PCE data stateside, of course, the preferred gauge for the Fed. To what extent will that change the narrative? Today, it is about tariffs, though. The Bloomberg Dollar Index is stronger. The tariff threat is real. Will 25% come through for both Canada and Mexico? We know that negotiations are underway. European futures currently pointed to modest gains of 0.1%. But again, looking to build on the records of yesterday. FTSE 100 futures pointing to a brighter session, up 0.2%. S&P futures, after gains of around 0.5 yesterday, looking to add 18 points. Nasdaq 100 futures, lifted by the prospects of Apple and a brighter quarter than some had expected, pointed to gains of 0.6%. Let's flip the board and have a look at the US Treasury curve. The 2-year and the 10-year, both seeing yields up around 2 basis points. 4.54 on your benchmark 10-year. Bit of selling pressure coming off across the Treasury curve on these tariff threats. Euro-dollar at 103, but that is not reflecting the strength that's coming through on the Bloomberg Dollar Index, currently up around 0.2%. Brent at $77 a barrel, gaining 0.5, also weighing up, of course, the impact of tariffs. Canada ships about 4 million barrels per day into the US market. We do not know yet if oil will be targeted. Gold at around record highs, the yellow metal close to 2,800 per troy ounce. Now, the European Central Bank may stop describing its monetary policy stance as restrictive at its next decision in March. That is according to people familiar with the Governing Council's debate. For more on this Bloomberg scoop, Lizzie Burden joins us now from Frankfurt. She was outside the ECB for that rate decision yesterday, of course. Why would this be significant then, the changing of the language, Lizzie?
Well, Tom, it's significant because it signals that maybe we're getting closer to the end of the rate cutting cycle, or that soon it's going to be time to take a pause in the cuts. If we look at yesterday's quarter point cut, it's a bit similar to the March meeting. The expectation is there for it to happen. We can talk about that in a moment. But a March cut would take the deposit rate to 2.5%. Now, currently, the ECB describes its policy as restrictive. And yesterday, they did not choose to drop that language. It would have sent a hawkish signal that we're getting closer to neutral. This is the level at which rates are neither restrictive, constraining the economy, or stimulative, growing it. But they didn't drop that word, and therefore there was barely any market move off the back of the decision. But then our team here in Frankfurt had the scoop that they are discussing in March whether to change the language, and you saw the euro rising a little because it's a hawkish hint. Now, there's a debate around where neutral lies. Lagarde said yesterday that on February the 7th there'll be a report on this very matter, but generally it's agreed to be about 2%. Hawks think it's higher, but of course the big caveat is there's a difference between neutral and the terminal rate. And given the weakness in the euro area economy, which we saw in the GDP numbers yesterday, it's not necessarily where they're going to stop cutting.
Yeah, and markets still see rates below 2% by possibly as early as September of this year. What did Lagarde actually have to say about the decision then and the path ahead, Lizzie?
Well, she said it was a unanimous decision. She said that there wasn't even a discussion of a jumbo move. So it was much more consensual than previous meetings. But as we expected, Tom, she was very tight-lipped about the path ahead. Take a listen.
We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path.
Now, in the press conference, she went on to say discussing where to stop cuts is premature. Even debating how to behave as they approach neutral is premature. But it does seem, as I say, pretty obvious that there's going to be a cut in March, because she noted that by then they'll have 2 more inflation reports, updated forecasts, and we know that they'll have the result of the German election and perhaps more idea on the shape of Trump's tariffs on Europe. And it does seem that the focus of ECB policy has somewhat switched from too high inflation to too low growth, because Lagarde also said economic activity is set to stay weak in the near term, but she was more optimistic about inflation. She said that uptick to 2.4% in December, that was expected. It came down to energy price volatility. She said even if services inflation is high, it looks like wage pressures are abating. And she said they're confident that inflation is going to reach the 2% target in the course of 2025. So this is why you saw traders adding to bets of easing this year off the back of that decision.
Lizzie Budden in Frankfurt, thank you very much indeed. Breaking down what we've been hearing from Christine Lagarde of the ECB, of course, and what it portends as to rates and the moves lower, potentially, for the ECB in the coming months and quarters. Thank you. Now, it is the last day of January. It is the last day of already, the 31st of January, of course, which means tariffs earmarked. Means a lot of things, but one thing it does mean is that tariffs earmarked by the US president are set to come into force tomorrow. First in the firing line, Canada and Mexico, although Donald Trump is yet to spell out exactly what he intends to do. Let's bring in Tatjana Greil Castro, co-head of public markets at Muzinich & Co. Tatjana, I want to start then on tariffs, and then we can move on to your views around the central banks, the ECB and the BOE. But from a corporate credit perspective, where is the vulnerability if we get into a regime of tariffs from tomorrow out of the US?
Yeah, thank you, Tom, and good morning. So first of all, with those announcements on tariffs, if we have seen, for instance, in Colombia last week, he may announce tariffs on Saturday and they may come off again on Monday. So it is very difficult to predict what they look like, how long they will stay, how high they will be, on which products they are. All this means there's uncertainty, and uncertainty that it doesn't matter how long you try to work on analyzing it, or how many reports you read, or how closely you even hang on the president's lips. It's very difficult or next to impossible to know. We tell our clients, luckily, there is actually a space within the credit market where you don't need to know those things in detail. You don't need to try to know the unknowable. And why do we say that? And that is, for instance, European investment grade, of which we have really strong companies, and despite the weak economic outlook and recessionary environments, which are shallow recessionary environments, those companies have such good liquidity, they have very strong balance sheets, and so you don't need to take a lot of risk. And this is actually where the best relative value lies, because those where the best spreads are to be found. So you can actually go into the credit market with very little credit risk, because it's in the short end where the best spreads are, and with very little interest rate risk, because it's in the short end where the credit spreads are. So in terms of risk reward, the market would have to move significantly against you. If you're looking in the dollar market, the market would have to move against you by over 2.5%, meaning the Fed would have to raise interest rates. Spreads in investment grade would have to double, which would mean an extreme external shock. So yeah, those are areas that are very easy to hide out in whilst you're waiting for a little bit more clarity.
Okay, so you want to be front end, investment grade, European credit. That is a place to sit amidst all this uncertainty. What is the function then of the ECB, and how and to what extent are you building in additional cuts from this European Central Bank when you think about how to position in European investment grade credit?
So that would be on top of what we have already in spreads. Then that would allow additional total return if rates were to come lower than what is currently priced in. We have priced in a few of the rate cuts. The rate cuts were down to close to 1.5%, which we think is probably a bit too low. But at the moment, being closer to 2%, it would indicate that there is a chance of additional rally. So on top of what you already can get, which is already attractive, as we said, there could be a little bit extra to be had. And we do expect the ECB, we talked about just earlier, Lizzie said 2.5% maybe where they said they're no longer in the restrictive area. We think that is a bit too high. We think they will only start talking about sort of exiting the restrictive area when they're in the low twos, so closer to 2.25, and they may go then stop at 2 or may go even a bit below 2. So if they were to go below 2, then it's not priced in the market at the moment.
Okay, so below 2, not yet priced in the markets. You think that is a possibility for the European Central Bank? The focus arguably switches as well to the BOE on the central bank calendar next week. Are you convinced? We've been hearing a lot from Rachel Reeves and the Prime Minister about the determination to grow this UK economy. Are you convinced by that?
It's very difficult to see that sort of those verbal pledges work out. I mean, she clearly has been bashing the entrepreneurial sector in her budget, and that has changed the mood significantly. A lot is talked about that. And the growth that drivers that she's suggesting, they're very sort of old-fashioned, and also those are big plans that are very difficult to implement, and they will take many, many years to implement, if at all. So to increase taxes, to increase regulation, to increase the red tapes, and at the same time trying to unleash those powers of entrepreneurialism is just a complete contradiction. So we see the sort of the noises that she thinks she needs to make, but in terms of her actions, it doesn't support there to be a big turnaround in the UK economy.
Tatjana, briefly before we let you go, do you want to be adding gilts at this point?
Within credit, we do like sterling-denominated credit, and that is because the gilt market has sold off so much and is also quite steep. Given that we don't think that the economic outlook will improve significantly, we think that allows the Bank of England to lower rates. And so we see there to be the chance of some rally in the rates market. But even if we don't get that rally, that's fine, because we get that really attractive carry. And what does that mean? We may not take the total return up front, which clearly would be great with regards to return drivers. But if you don't want to be overly greedy and you just want to rely on very steady income, then the sterling market offers you this additional income that you can pick up.
Tatjana Castro, always smart on these markets, co-head of public markets and Muzinich & Co. Sit in investment-grade European credit, but also opportunities in UK gilts with the BOE expected, at least that's the view, to move maybe more in terms of dovish moves lower on rates than maybe some expect. Tatjana, thank you. Coming up at the end of what was and has been, of course, a huge week for tech, we're going to look at Europe's role in the AI race. Europe's role, does it have one? Stay with us for that conversation. This is Bloomberg. Welcome back. Now, Bloomberg has learned that OpenAI is in talks to raise as much as $40 billion in a funding round led by SoftBank. $40 billion. The ChatGPT maker is in discussions to raise funds at a post-money valuation of $300 billion US, assuming OpenAI, of course, raises the full amount. It was valued at $157 billion just in October, so almost doubling that within just a space of months, of course. Bloomberg earlier reported that SoftBank was considering investing $15 to $25 billion into OpenAI, a deal that would potentially make the Japanese company its biggest backer after Microsoft. With me now to discuss Europe's role in the AI race is Laura Connell, a partner at Atomico. She says the AI race is being redefined in ways that actually mark clear areas of European opportunity, which for many may sound counterintuitive, Laura. I want to start by kind of reflecting what's happened this week, because it seems to have been a pretty momentous week in terms of the innovation coming from DeepSeek, and then what we've heard from a number of CEOs of those Mag 7 companies stateside. Was this a pivotal moment for AI?
It's been such an interesting week in reflecting on how much what seem to be minor announcements in model evolution can really trigger the markets. And that's partly obviously a function of the fact that so much of big tech has allocated significant investment and spoken obviously this week again about significant capex investment in order to really build capacity and be it across compute, critical infrastructure, data centers, and indeed even kind of energy. And so we've really seen that ripple effect throughout the value chain from the kind of compute providers, be it Nvidia, having $600 billion worth of its value wiped off at the beginning of the week, or indeed right back into kind of nuclear providers on the back end who are obviously a critical component
in providing that bandwidth. Do you think that spend is going to be reduced?
I think that the main thing to remember is that, and Satya Nadella talked about Jevons paradox earlier this week around how kind of a decline in cost will actually drive adoption. We've been on this trajectory for some time and it will continue. And it's a net good from a consumer perspective to frankly have costs decrease rapidly. So again, to this idea that, sometimes markets overreact to near-term information, but actually we're from a secular perspective on this long-term decreasing cost trend, which frankly is a requirement to see broader adoption in the industry and will drive broader adoption.
What does it mean for Europe?
For Europe specifically, I think we need to ask ourselves what are the kind of boundary conditions that have allowed the Chinese and will drive the US to really increase overall AI capacity and leadership, and do we have those conditions in Europe? And so rightly there's been a lot of reflection this week around whether or not we've got appropriate capital committed to driving critical infrastructure. Obviously big news with Stargate and a major commitment from the Americans. China had expressed back in 2017 their willingness to be and desire to be the kind of global leader in AI by 2030. We need to make similar commitments to investment in critical infrastructure. But I think where we already have a really interesting advantage and possible edge here from a more of a kind of specialised industry perspective is actually we've taken a much more, shall we say, clear approach in terms of regulating those areas, those industries where data privacy and consumer protection are critical. So take healthcare as an example. The EU AI Act, though it's far from perfect, has already made significant headway in clarifying exactly what it would mean from a data privacy perspective for healthcare providers to operate within and driving adoption within the European AI Act. And so what that is absolutely critical for, and obviously also critical in the context of Trump rescinding Biden's AI Act last week and what was going to be harmonisation with the EU AI Act, is really allowing EU companies that are building within this higher, more comprehensive regulatory framework to passport that level of data privacy and regulated approach throughout the world. And so I think actually where we'll see Europe have a clear advantage is in being first to trust by virtue of higher regulation, better regulation arguably in critical industries over time.
But that's what's really interesting, is because there is a view in the US and parts of Europe as well that in fact we're getting regulation wrong.
Yes.
That the moves by the US are the right ones to catalyse and crystallise the innovation. You're suggesting that actually the regulatory frameworks in Europe will themselves be a catalyst.
Yeah, and I think we've seen that time and time again. Now, let me be clear that a reasonable level of regulation is one thing and over-regulation is another. Free markets and competition are a critical driver of innovation, but not on an unfettered basis, particularly when we're talking about critical industries where lives are in fact at risk. So take healthcare, take defence, take energy. It's absolutely essential that we set a standard in terms of explainability, data privacy, consumer protection, and some reasonable constraints for developing any kind of new technology. So not regulation at any cost, but rather a sensible framework that gives clarity over the medium and long term to people building in critical industries.
Arguably, we have just one really serious foundation model company in Europe, and that's Mistral in France. Do they get bought out? Do they survive this, do you think?
Yeah, well, interestingly, I work with many founders that are building at the very early stage. That's what we do at Atomico. We seek to work with founders who want to build category-defining companies, and many of our recent investments are in the AI space, as is true of most of venture capital, unsurprisingly. So I don't think that that characterization of Mistral being the only player is the right one, actually. I think you're right that they're absolutely one of the leaders in European AI, but more broadly, actually, we're seeing lots of grassroots innovation across the board. But now is the time to invest aggressively, both in terms of direct investments with technology investment, direct backing of companies, but more critically to your point earlier, around really driving critical infrastructure in Europe and making sure that we're increasing bandwidth across all parts of the value chain that are essential to building the next generation of AI
Before we let you
companies.
go, I just want to kind of round this out, because you're calling for more investment in the infrastructure, the critical infrastructure, and yet DeepSeek is a reminder that efficiencies can be created.
Yes.
Where does it not change the spending impetus? Do you not want to be spending and investing in the companies that are building on top of that infrastructure?
Yeah.
How is it changing the way you invest?
Yeah. So I think that there are kind of two countervailing trends. On the one hand, on the one hand, you'll see the absolute cost of compute declining, and we're absolutely on that trend, and quite rightly. But on the other hand, we're seeing increased adoption. We're very, very early in the adoption curve from a consumer and business perspective. A lot of the innovation we've seen the last couple of years is just starting to filter through into actual kind of enterprise-ready applications. And so as that adoption increases, we also need to drive broader capacity in order to service the increased demand. So you're on the one hand decreasing computational costs and decreasing costs across the value chain potentially that are upstream of those applications. On the other hand, demand really over time should increase and drive overall adoption and therefore required supply. So, I think there's so much unmodelable optionality in this market and so much that we don't know yet. It's too early really to make a defining statement about whether or not we should be decreasing investment. What we know for sure is that we are somewhat constrained today still on a global basis in terms of building to meet this next generation, next wave of demand and adoption for AI.
OK, just in the early stages in terms of adoption, that could be accelerated as a result of what we've seen this week. Really smart analysis at the end of a huge week for the technology sector, with the focus on Europe and the opportunities as well for European builders and investors. Laura, thank you very much indeed for coming to the studio bright and early this Friday. Laura Connell, partner at Atomico. There's plenty more coming up. Stay with us. This is Bloomberg.
I think that's a very interesting academic discussion that I was marginally more open-minded about before the pandemic. I think one of the things that we've learned in the last 2 or 3 years is people really, really hate high inflation. And I think there's zero appetite. My judgment is there's zero appetite, even though the academic arguments, I understand them, there's zero appetite to raise the inflation target.
That was Minneapolis Fed President Neil Kashkari, and you can watch the full interview on Wall Street Week. Talking of inflation, let's get you up to date in terms of where things stand. This is a reason why the Fed stand put. Of course, we have PCE, their favoured gauge, coming out later today, and that is the white line that's being illustrated here. Still, of course, clearly above. Core PCE still clearly above that 2% line, the target for the Federal Reserve. The data comes out later today, expects to come in at 2.6%. Consumers buying durable goods as well. Bloomberg Economics says longer term, though, there is still the scope for lower rates stateside. The CAD is moving. Canadian dollar, of course, on the tariff threats. The opening trade is up next. We'll discuss this. Stay with us. This is Bloomberg.